Welcome to the Market Mindset. We are the hub for news, results, and CEO interviews focusing the junior commodities sector. We provide market analysis and perspective that will help position you for solid returns. If that sounds like something you're interested in, you can help support us by liking this video, subscribing to our channel, and clicking the notification bell. For more info, you can visit our website. All links are in the description below. Now let's get into today's video.
Good morning, everyone. It's Andrew with The Market Mindset. It's a real pleasure today to catch up with Stephen Palmer over at AlphaNorth Asset Management. He's the President and Chief Investment Officer. We were lucky to speak with him at the tail end of last year to talk about small cap investing, and certainly AlphaNorth Partners Fund has done exceptionally well. You know what? We want to just check in to see how the fund's going, but also there's no better person to ask, especially regarding the micro cap space, about the current macro situation we're in, than someone like yourself. How are you doing today, Mr. Palmer? Glad to have you here.
I'm good. Thanks for having me.
Absolute pleasure. We're going to talk about a bunch of things. I think if we start off at the top layer, at the macro layer, I think everyone can admit that we're in a very chaotic time right now, and it's tough to forecast anything, but maybe you can kind of walk us through what you're seeing and some of your experience of these markets.
Yeah, well, there's a few things that have happened that have caught people off guard, like the war first. It's the obvious one, and inflation, I guess. I have somewhat contrary views. I was in the transitory camp. I believe inflation was transitory, and some things have happened that have extended that, and so it's kind of beyond transitory now. But we've had the war happen, which caused energy prices to go up even more, and then the COVID lockdowns in China have all extended the supply chain issues.
Yes. So
I don't know. I'm not really understanding why the Fed is so aggressive in hiking interest rates. If you do look at the inflation numbers, half of the inflation, 8.3 was the last reported number, but 4% of that, or half, is due to energy and cars.
Yeah.
And it's cars largely because of chip shortages and supply chain. So I don't know what increasing the Fed funds rate is going to do for those two major components of inflation.
Yeah, I mean, how it won't. I mean, they're not correlated anyway. There's no way that those can affect those things.
No.
I think that's part of the problem with some of the messages that come across, and people go, "Oh, inflation's up as this," and if they just did this, it's like, well, we still have the fundamental underlying problem of a war right now, and that whether it's fertilizer and food, which is a big problem, or just supply chain issues, whether it would be nickel, as well, ammonia, potash is a big thing in Russia as well. All of these things then become off the table. And as it escalates and goes further, we need to look for other solutions and go, okay, well, how do we adapt to this now?
Mm-hmm.
And
possibly the government should be trying to alleviate these supply chain issues, which would help bring inflation down.
If there's some way, I mean, there is a way, but that governments could really get behind this messaging of, a shift in energy, a shift in focus, and to really amplify the natural resources that we have here in Canada, and to really amplify that message to encourage people to say, listen, if you want green, you want this electric future, you want all these things, let's make a pathway in the capital markets for you to incentivize it and get a lot of our companies doing them in the right regulatory framework, which we already have set up, and having say, like I like to tell people in my backyard, like we want this in our backyard because we get to have the regulation, we get to have a say. And if we just allow somewhere else in some other country to go, we'll do this mining, we'll do this processing, we don't know if they're going to adhere to any kind of standards.
True. Yeah. Yeah. The governments have been discouraging the conventional energy, oil and gas, for a while now, and now we're in a situation where there's not enough, and you can't phase these things out overnight. It takes time, and with lack of investment, so we don't have as much production as we would have had otherwise.
Yeah, certainly. I mean, I think we're going to see a lot of companies in Alberta in the energy sector do have a great year, and we always kind of mention it as being unintended consequences from having some of these decisions. Whenever you could easily lay out a plan, like you said, to phase out and say, listen, we'd like to phase out within 10 years by 2030. Say that's an enormous, ambitious plan, but it just seems like it was like a decision that let's just turn everything off. And then we've got an issue now with Russia. I mean, Europe, as far as energy, is a total disaster. It's a shock to the system. It's definitely a shock.
Yeah. But in terms of small cap, energy is one of the few bright spots in what's been a very challenging market.
So what do you see? I mean, we won't name companies, but are you pretty optimistic, say, in the overall, the junior energy sector that's probably a bit more buoyant in Alberta, certainly in the last few months? It's had a rebirth.
No, the companies are in great shape. Like, the commodities have been very strong. Valuations, even over the past year and a half, are, despite the fact that a lot of the stocks have performed really well, valuations are not any higher than they were because the companies are growing so fast, and the commodities prices have gone up.
What are a couple of things, because we were talking about inflation, and we talk to like a lot of retail investors, and they don't get a chance to speak to a fund manager, a hedge fund manager. What are some things that a person could look at and do in a practical sense, but also maybe in a generalist kind of investment sense? What things could they be looking at in these kind of times to, I guess, ease the burden, or to go talk to their advisor, or certainly to go to your website to look at your fund? Other than that, what are some things they could be looking at?
Well, if they want to hedge the fact that they're paying more for gas and things like that, why not just invest part of their portfolio in an oil stock? And presumably, if the gas keeps going up, they'll make money on the stock, which will offset the more they're going to pay at the pump.
What are some other big macro themes right now? I mean, there's so much geopolitical, I'd say even more so than at any other time I could think, that are affecting markets in such a monumental way.
Well, investors have been very negative lately. Sentiment is a lot of I've seen a lot of charts that show sentiment surveys, or percent cash, or whatever it is. A lot of these metrics are at an extreme level, like back to when they were in the global financial crisis, for example. Some people are looking for the big washout, where the volatility or the VIX spikes high, and there's big volume, and the markets go plummet within a couple of days. And that's an unpleasant event, but it would it's highly associated with the market bottom if that were to occur, but I don't think it needs to occur. I think markets could bottom here, and they seem to be. I'm encouraged that they may have found a bottom, just on the fact that sentiment has got so negative. It can't get any more negative, and things are just going to start going up.
There's lots of change happening. There's a big shift going in, and there's war. There's this. That can be overwhelming, and that sentiment, obviously, social, political, is reflected in a market as well. But if we I like to think, turn our focus onto what we can create in the future, and look to those, especially junior companies that have got outstanding management, and who are focused on a lot of these major themes, like solving, say, food and fertilizer, energy, all those battery energy metals. If we look to those, those have pulled back so far that they are at incredible value now.
Like, fundamentally, nothing has changed in most cases. The biggest risk really at the moment is share prices are very depressed on most names. And if a company needs to raise money, there's going to be excessive dilution. So if you bought a company with the assumption that there's so many shares outstanding and they're going to execute and achieve whatever, you may have to modify your assumptions, because now there's going to be a lot more shares than you originally thought.
Absolutely. And this is what happens, especially we see this in the junior markets, in mining, because mining's tough. It's a tough market. And to yet hit I talk to companies every day, and they're cut 25% on no news. And it's like, everyone liked the company. They're really excited about the drill results. We're waiting for results. They're going into a new program. The stock's pulled back and it has nothing to do with them. And that's tough. Now, some of them were lucky to be all cashed up before a lot of this downturn. But like you said, if it's a company that just needs, $1 million to get through, that gets tough. That gets very tough.
Yeah, maybe maybe they raise less money than they planned and try to just do a bridge. I've seen that in several occasions lately.
So what do you think for someone who's looking at the market now, and we never try to, say get in the market, not get in the market, but we've seen some pullback. Do you feel there is optimism kind of moving ahead? And I mean, for the generalist investor, not necessarily institutions, but retail, like what do you think for them? Is it time for them to be kind of focused on jumping back in?
I think so. I'm quite bullish, actually. In terms of my space, like my benchmark is the TSX Venture Index.
Yeah.
Which peaked in February 2021. So we're well over a year into a downturn. It's from peak to trough, it's down 41%. If you buy at near market low, that greatly enhances your returns. It's just having the guts to do it and the cash available to do it.
Yes. And most people should be looking long-term as well. And if they look long-term, this is a big opportunity. Because if we look back at 2008, big pullback, and then it took off again. Like, it does happen. So it's not like it's the end of time. like this is the end for everyone. Because that's a message people get out there and say as well. Like, there's this big reset. There's this, it's the end of this. And I kind of go, listen, it's a big shift is happening. There's lots of change. But believe me, tomorrow will happen. Life will go on. And markets will probably perform very similar to as they have in the past.
Yeah. The people that are negative are going to point to the war and the uncertainty over that, the uncertainty over inflation. They're going to talk about rates going up and there's potential for a recession due to that. And there's all those uncertainties exist. But by the time we know how they're going to unfold, the market's going to be way higher than it is.
I think that's the best message to hear, is that, I mean, from someone like that has all the experience and the criteria to met and has been in this space as well. This is why I'm so glad that we get to talk to you, because people can see from your performance how you've done. This market intimately well, and to have that kind of expertise and whatnot is good for all of our subscribers, for sure.
Yeah. No, our space has been quite volatile since we launched the fund in 2007. But despite the various ups and downs, we've strongly outperformed the indices. And what I tell investors is, if you can buy on one of these dips, you can even get far greater returns by doing that. Unfortunately, most of the investors, they come in, they chase performance, and they buy close to the peaks rather than the troughs.
I know so many people, and this is nothing against the ARC, Kathy Woods, because she's great, and I like a lot of the big themes for long term. But I know so many people that went in and bought that ARC fund right at its peak, and I kind of, I never want to discourage people from doing things, but I just said, oh boy, I think you might want to just hold off a little bit longer. Long term, she's going to be fine, but right now it's play things a bit more defensive. That's kind of my thought pattern. But that, I mean, because I have a mixture of maybe that gloomy forecast look, but also I have a big silver lining with that hope, and I see that long term, if we can get that leadership, a country like Canada could storm ahead so well, and there could be so many companies that do very well. So many resource companies and battery developers that could be just really changing the landscape of Canada.
Yeah, the Canadian market's underperformed now for several years, as it's mostly the US big tech names that have been driving the markets. But if you look, I think year to date, Canada's outperformed significantly, and that's because of the higher resource component, particularly energy. And I think we've got a nice runway here where Canada will continue to outperform.
Excellent. Well, everyone, make sure you go to AlphaNorthAsset.com and you could reach out to them about their funds, fundamental and technical analysis funds. I'm sure if you send Stephen an email, he'll let you know how, if you want to invest with them, that's certainly, you should take a look at the information they have on their site, their performance, how they've done. And we really appreciate you coming on and helping to educate us, let us know what's happening, because to have the expertise is very handy to get that message out.
Okay, well, thanks for having me today, Andrew.
We really appreciate it, Stephen. Have a good day, and we'll talk to you real soon.
Okay,
Take
bye
care.
for now.